clear trade, nothing too spectacular. You're looking for 3 pushes on the 15. All of these basically gave that in some degree or another. Maybe the GN didn't. Maybe as you got down here on this list they didn't. But certainly these two did. This EJ definitely did. Right? And go back and look at EC and EN on your own. You'll see that they had a lot in common with what we went through last week with these 3 M15 pushes into an MW in our New York session part 1. Okay, let's look at our next trade here. 3 M15 pushes into an A or a V pattern with the extremely required caveat at a clear trap area or zone flip. And those of us who've been around Steve's group for a while, if you remember way back, some of his early traders from an unmentionable venue had something called the Empire State Candle, and they call it the Empire State Candle, so it's rather fortuitous that this photograph is showing up for an AV trade. Let's walk through the specs of it, shall we? Okay, remember, it's 3 M15 pushes into an A or V pattern, single spike. It's not an M or W, it's an A or V, but you're dealing with a previous trap area to the left or a zone flip to the left that implies a higher time frame M or higher time frame zone flip. Okay, that's that's huge. Without this, you're just taking A's and V's in New York Empire State Candles with nothing to the left. Don't recommend that. Don't do that. You want to have something to the left that you can put your teeth into. And I'll guarantee you guys, after thoroughly studying what we're doing this week, last week, and next week of these New York session setups, if you take these to heart and then you also go back and do the required flashcard sequences and you walk through the scenarios, train your mind on all the variations, you will be fine as a New York trader. You'll grab your 15% a week. I'm absolutely certain you will be able to do that. All right, let's look at a scenario here across 3 days of price. This is a 15-minute chart drawing. I'm going to draw first, then we're going to pull in actual charts. All right, so I'm going to draw first, and this is a depiction of 3 days across a 15-minute chart to give you an idea of this trade right here. It's a clear trap to the left, meaning that you might have to open up your charts a little more. And when I say that, what I mean is that instead of looking at your charts at this resolution, click the little zoom and look at it more like at this resolution. Let me get that out of there. I don't want to give away the trade because it's in there. All right, so this is it. That's the first day. Second day comes and basically chops around. Third day does this type of thing. All right, so that's your 3 days of chart play out. You're mostly going to see that on a skinny, narrow, zoomed out chart. It's a 15-minute chart, right? And what we're looking for is we're looking for this trap area back to the left. This is one of Steve's boxes. It's a box trade as well. You can call it that. Absolutely. Could have just said 3 M15 pushes into an AV at a box. Okay, but we're going to clearly depict what these boxes are. They can be a trap area or a zone flip. So this is where it looks like our strong trap area is. And we've got a 1, 2, 3 up. The reason why this is not probably a good idea to take a single leg A short is that it has not yet reached back into this previous trap area. So one can filter out all of these possible A patterns by using something off to the left that it anchors onto. So in reality, you're not trading an A or a V, you're trading a higher time frame M or W structure or a zone flip structure. I want to make that really, really clear. So I'm not going to get you into the first A or V that you see in New York. That's not what I'm trying to do. I'm trying to make you aware that you want to wait for something to the left that's very clear. Okay, and the second aspect to this is the same that we talked about. Remember these M's and W's last week? We talked about 3 pushes into gap time New York. We talked about the timing as being an important aspect, 9 to 10 a.m. Eastern Standard Time or 11 a.m. for the tea time Eastern Standard Time. We talked about those 2 timings. Those 2 timings are also highly relevant in this, call this a wider time frame trade. This is basically a wider time frame. You're not just waiting for a little M here on the 15-minute. You're actually pulling in 3 or 4 days of chart history to then look at trap areas back to the left. So this includes 3 days ago, you're still waiting for your ideal move inside of the gap time box. Very important. And also understand that red news can often drive this with a false move, a false, fast move. Does this look familiar to anybody? Did anybody see something like this today in the charts? Anybody see anything like this go down? All right, just hang on to that. Okay, got a little news blast. Sure enough, boom, ran up, gap. Little tiny gap inside here. Wham, just hit the highs. All right, came right into this trap area. We've already had our 3 pushes to the long side, so we're waiting for short. Could have happened in that pair as well. Let me just double check that. I'm not sure if it did. But now you mentioned that pair. That wasn't the pair I was talking about. Yeah, I'll put a yes there. You guys, yeah, it did happen in the CAD also. Huh, good. This is another pair that it happened into. So if you want to pull 7% out of this one, and then get, pull a few out of CAD, then follow along, because this was happening probably concurrent with the CAD. All right, so there you go. There's your move. There's your gap time box. So right at the end of the gap time box, we've already had 3 pushes up. We're coming into the zone that we drew. All right, that's starting to look like a short. What are we going to use to filter our shorts? How are we going to get into this thing? What's a good way to get into this? Hello? Anybody? M1 chart, yes, M1 chart. Get into the M1 chart business. Start to look for these market maker cycles in the M1. This is the place you want to be looking for the benchmark in the M1. All right, benchmark. I put this on every show. You need to understand this is such an important piece of the puzzle right here. You're looking for something like this in the M1 chart. Okay, most likely it's going to start down here somewhere. Most likely it's going to the start of this small microcycle is going to happen back here, and it's going to terminate at the top. So you're looking for some type of 1, 2, 3. No, it's not always going to be beautiful and perfect like this. It's going to be variations. That's why we do flashcard sequences. That's why we look at as many possible variations as we can. So let's just draw a little wacky one on here. I'm taking it, I'm going to just stretch your mind a little bit and just make that not too perfect. All right, remember, the place of this is not after we're late. If we're waiting for this M to show up, we're late, right? Just remember that. Let me just cover that here. Okay, I'm going to pull in paint here. All right, if you're waiting for this to roll over, you're late. Where you want to be ready to take this, where you want to see this, is on the edge of it. You want to be able to know where you are here. All right, that's where you want to be able to know that's going on. It's right here. So that really implies that you want to know what's going on here. Okay, so you want to be able to see 3 up right on the edge. Wait for your first leg, confirm. Let it come back, hit the high of day if you want to grab that, and then let it roll over. That's the latest place you want to be seeing this structure, right? And just what's so beautiful about this, I mean, it doesn't take a rocket scientist to figure this out at all. You're trading against everybody in the world. Whoops, trading against everybody in the world that sees that. Shoot, let me get this. That everybody sees this as a channel. They're all channel trading this stuff. Okay, awful. That whole GAN thing, and oh, forget about it. You're just getting smoked. All right, so what do you see in here? Let's depict it. 1, 2, 3 up. All right, look at your W on the bottom. You had your first push up, pull back, 1, 2, and then up to 3. So that's a 3 within the M1 chart that happened a little bit below. It would have started inside here below the gap time box. All right, something did this. I haven't even answered the question yet. You guys haven't answered the question yet. What pair did this today? All right, CAD, I can take that as a possibility. It didn't do exactly this, though. I modeled this off of an actual setup today. There you go, Patricia. Good girl. All right, so this M1 chart right here, looking back to the right, is depicting this zone in here. So you'll never be able to see this detail in the 15. I want to say never, but you're probably not going to be able to see this level of detail in the 15-minute chart. You're just taking a slice out of the 15-minute chart, blowing it up, looking for the detail. Obviously, you're waiting for an M in here. Okay, looking for a tap. Well, first thing you're looking for is a tap or close below the 13 EMA M1 Lime for your first leg. So we want to see at least a tap to this 13 EMA or even a close below. We're looking, obviously, the next thing in the line here is a 13 EMA tap or close. In this case, it tapped. Mexican man, Philip, you're funny. Is it true? I don't know. I don't even have that pair on my board. That's hilarious. Good sense of humor there, Philip. All right, so we have our tap, and then we have our pullback. Okay, and then we have our M, closes below. Right, it did this. Right? The mystery pair that shall go unnamed at this point did this today. Right at this time, right at the end of the gap time box. It's just awesome. EF, maybe. I didn't watch that one. It might also be there, George. I wouldn't. See, the idea is I'm showing you guys a principle of AV trading with something back to the left and bringing the timing and the microcycle. That's going to happen on a lot of pairs conceivably every day. All right, so I wouldn't be surprised if this showed up across more than this one particular pair we're looking at. All right, so this is what we would see on the M1. Nice clarity. You've got your M. Basically, a 15-minute chart is just barely starting to roll over. So you have to get used to this. It's like it's like the cat on the railing. It's 40 stories down, but the cat's fine up on the railing. You have to be able to hit those short on that extreme. All right, so your entry and stop loss just above. Looks like this on the 15-minute. Absurdly tight stop loss on the 15. Nice and big on the M1. Nothing changes outside the high of day. All right, that's the advantage. Now, target 1 is going to be our catch-up, and it's going to be from the 13 EMA on the 15-minute chart. All right, so your catch-up's going to roll through like that, okay, on the modified M1 charts, which I'll go into in a second. Okay, and that's right here. So if you want to get to these modified charts, go to the forum, go into AFP Tools, jump into the topmost link. It's right there. It's at the very top of this AFP Tools. The first link you're going to find is a link to these updated Market Maker templates. Jump into that, and you'll see this all time frame 11/13/15. Okay, that is the template that will have this tweaked out version of the M1 EMAs for you to make life simple, because you've been studying, some of you quite some time, the M15 ketchup, mustard, mayonnaise, water. All right, so you know those. Why would you have to relearn everything for the M15? We wanted to get you there faster, so we pipe those down into the M1 chart so you can actually bring those forward from the M15 chart onto your M1. The only new one is this Lime, is this 13 EMA. The rest of them stay the same. They're exactly like what's on the 15. You're savvy about your M15 condiments. That's what you trained on. That's what you studied with. Don't want to lose that instinct. I'm going to keep that there. Just bring them onto the M1. It cleans up the M1 a lot. We'll show you an example as we go forward here. All right, so we're pulling out of this trade. Next technical rule for this type of trade is, and this is huge, this is the one that's going to make you very peaceful as a New York trader. I know a lot of New York traders, the first thing you have to do is be okay with drawdown. That's not what this trade is about. This trade is not about being in drawdown. All right, we've made an aggressive entry on the M1 microcycle, all in line with a higher time frame trap. Now, when you get to that catch-up, I want you to move your stop loss to break even, assuming you got in at the close right here below the line on the M1 chart. You got a nice high day order, which I do recommend from New York traders. I want you to get good at these high day orders, but there's a lot going on here that you could have factored into the equation. Get in there and have enough room that you can roll this stop loss to break even when you get to the catch-up, when you get to that 13 EMA. All right, many times it'll pull back into the line, it'll hit it, pull down, hit it, pull down, hit it, pull down. A lot of times a good trend will be contained within the 13 EMA from the M1. You want to wait for it to get to the 13 EMA from the M15. All right, that's what it's going to look like when it first hits it, and lo and behold, it's almost always going to bounce when it hits there. All right, but move your stop loss to break even at this point. Right when it hits that 13 EMA, stop loss to break even, rub your hands together, say thank you very much for another free trade. You are no longer at risk of losing your trade. Okay, do that for these trades without question. Sometimes you will want to take profit here. There are going to be some occasions where you want to take profit. Okay, in this example, we're already up 2-to-1 risk to reward. Already up 2-to-1. Very nice. So if you took it off here, no sweat. Do you want to trade minus 25 pip stop loss with a 1% order and take a plus 50 to get your 2%? Well, you can do the same on an M1 chart. Just get a 7 pip stop loss and a 14 pip take profit. It's the same thing. You did it in far less time with far less pain. Right? So these tight stop losses are great for us. Really fantastic, actually. Always, 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 90% of the time, going to bounce off of the catch-up from the 15-minute chart. Right? These custom charts we have are really nice. There's no funny EMAs in here you have to figure out. There's no funny stuff in here. Your red one's the first one after the line. Right? There's no water that doesn't make any correlation when you go up to the 15. It's nice and clean. All right, so price will almost always bounce at the catch-up. I say always. I treat it like it's going to bounce there, period. So I'm at least running my stop loss to break even. It bounces to the catch-up. Sometimes you get this stick up, and guess what? You got taken out of break even. No big deal. The trade didn't cost you. All right, that's the first lesson in trading is learn not to lose. Then you learn how to gracefully win. Okay, in this case, we had it drop down below the catch-up. It bounced off the 13 EMA and boop, dropped down. Target 2 is going to be just in front of the next 50 or 00 price point. Whip will pull up a 00. Put a 00 in there. That's going to be your next technical area to watch to see what happens there. Okay? And sure enough, also keep in mind that price can reverse at 11 a.m. So you want to also be aware of when 11 a.m. is for tea time. Okay, 11 a.m. right there. And same with the 15-minute chart. Your 15-minute chart looks just like a single spike Empire State pattern. Your M1 chart has a little M in here, and it's just dropping below the catch-up, stop loss to break even. You're looking for how it handles the 00, always understanding that it might turn in front of the 00. When you're looking at a 00, it's not so much like the EMA as we're expecting it to go through the EMA. It's a lot of times going to bounce in front of the 00. So you're thinking, how are they going to handle this area? All right? That's how you want to play this trade. Target 3 is going to be the water. Okay, your third target. When I say target 1, 2, 3, when I give these names, it doesn't mean you're taking profit at each one. You can but it means you're looking for milestones for how the dealers are dealing with each of these areas. The water sometimes is the ideal take profit. Sometimes the Mayo is the ideal take profit. So the Mayo is the 200 EMA down below, all right? So that's the order, is 13 EMA from the M15 chart, a 0, 0, or 50 price figure, then the water, then the Mayo, all right? Those are the 4 areas you're looking for take profits on this. Yes, it was, Stephen. I hope you didn't go spend a bunch of time looking on the charts to figure that out and you missed all this. If you did, you want to review this last section. This is huge. This will be in the recording. You need to take this very, very slowly, one of these aspects at a time. I'm going to give you guys a screenshot of this also as we go forward. Okay, so they run it down into the 0, 0, and guess what? Just in front of 11 a.m. tea time, they bounce off the 0, 0 just in front of it and hook it back up. All right? If you're really in your game, you're ready to take down here. Okay? Take profit. That's what I do. All right? If you needed for the pullback, oh, Jim, plus 22 pips, that's garbage. Really? With a stop loss of 7 pips, 22 is a 3-to-1 trade. Okay, 3-to-1 with 1%. What do you got? 3% gain. What if you put 2% on this trade? Oh, you got 6% in one trade. I don't care how many pips you get. It's how heavy you are and how correct you are in your assessment. Unquote, Stephen Morrow. All right? Doesn't matter how many pips. Don't worry about the pips. It's how much you pull out of this market percentage-wise. All right, New York trader, you're not looking for 50 every time you trade. This is the best adaptation you can possibly do for New York trading, is get a tight stop and get a nice technical ability to scope out these take profits before they happen so you can get out there. All right, beautiful. So this is the screenshot I want you guys to grab. Go ahead, and there should be a little camera on the right-hand corner symbol. Click that, and you'll be able to grab a screenshot here. I will also grab a screenshot, and I'll remind myself to post this in the forum after our DMR, so you guys have that, because I really want you to keep that one on hand. It's a very important flashcard. It is the rules for an AV. 3 pushes into an AV at a clear trap area to the left zone flip trade. Okay, so just consider those rules for a second, then we'll go back and look at the real life example of this with a little fun detour on the way, even though time is just running from us. Mr. Clock, stop speeding up. All right, AV zone flip trade. Okay, save that and post it in the forum afterwards for you guys. All right, let's get going here. A pattern obviously is not really an A because you have a trap back to the left forms a M or a zone flip. Okay, let's remember the higher time frame picture. Let's look at an example of the charts from today, but first, a new student M1 trade. Richie, are you here tonight? This is a nice trade. All right. I could have done it on the hard right edge, but just didn't have the time. There's a W, there's a 1, there's a 2, there's a 3. This is an example of the older charts on the M1 chart. I mean, it gets messy. You've got the arrows, you've got EMAs, all you got the catch up in here. Catch up on the M1. I don't know. This also the water on the M1 chart doesn't exist on the 15. There's nothing we look at that lines up with this. Right. So I want to clean this chart up a little bit. There's your M on top. It's about a 40-minute trade here that he took. All right, nice trade. Could have held it further. I'm going to show you how. All right, so not the ideal chart for M1 trading. That's not how I want your M1 chart to look like. All right, there's no 50 and 00 price figures. I don't see where the 50s and 00s are. This isn't a 0 or 50. Okay, you don't have the EMAs optimized from the M15 chart, so you have to relearn the EMAs if you're trading the M1 chart out of nowhere. I don't want to relearn the EMAs. I know them cold on the 15. I don't have to relearn them. All right, also a darker RSI price line will make it pop out. This is a little light for me, so do that. All of that stuff is there. All right, so this is the custom tweaked out chart that you guys voted for, by the way. You voted to have it this way, and it's so much nicer. Look at the bounce off the 13, comes back. Remember, this is London. We haven't got, New York is off to the right. We're going to look at that, but it is EU that did this today. All right, now this is the London pattern EU. We're going to look at the New York on the right-hand side, and we're going to walk through that trade that I just showed you in a drawing format. All right, but look at this. Look how clean the 1, 2, 3 up is in this. The M didn't even give you a tap to the pullback 13. Sometimes you will not get a tap. Understand, it's still an M. And then it just rolled right back down, hit the 13 EMA, stop loss to break even, and then you're expecting another move, comes down and hits the Mayo perfectly, really nice. There's also a little bit going on the H1 I'm going to talk about here. But Mayo was a nice TP for this trade. Okay, so let's go to the hard right edge of Richie's entry here. And I call this his entry. He entered a little later, but that's all right. Let's call this an entry, and then let's look at our H1 chart. Looking at this H1 chart is a zone flip that price went to. It's rather embedded, so I don't expect you guys to see it on the hard right edge as clearly as someone who's seen it before. All right, but there's your zone flip, and you can see they've been closing right at that point for a while. This is actually worked out in the future, and that's exactly where they turned it. Remember, our first milestone is that 0, 0. How are they 0. Will they bounce off that and take off? Maybe. Next milestone, of course, is the catch-up from the 15-minute chart. They might hit that and bounce. And then your next milestone, obviously, is this zone flip back to the left. How are they going to handle that? By the time they get there, though, you'll see that the Mayo actually threaded up, and then it became the Mayo. But we're also interested in any scenario-based projection of targets. Very important. Watch how price handles each target. How do they handle the 0-0? How do they handle the catch-up? How do they handle the zone flip? How do they handle the Mayo? And how do they handle the water? Okay, Mayo from the 15, water from the 15, catch-up from the 15-minute. Okay, we already have that stuff deeply ingrained in us. There's no reason to just toss that for the M1. All right, so this is what it did. This would have been your highest amount of pips from this particular trade. They came right to the zone flip, and notice how the Mayo jumped up and threaded through there. Okay, so you had a Mayo tap as well. You were hitting this zone flip back to the left. That was where you wanted to jump out of this trade. There was your W, and there it just rolled back and rolled out. Okay, so now let's move to the New York session. We'll walk through what we just talked about. It was euro-dollar. Okay, so you guys should know what's cooking on this chart. Where might price turn in today's New York session just looking at this H1 chart? Quick pop quiz after the lesson. Anybody want to postulate where this might turn to go short? I want to see if you guys have retained what I've said. Anybody? Well, yesterday's high was right here. You mean the day before yesterday's high? Previous thing on the left, George. Boy, you couldn't be more specific if I forced you to be. Previous thing on the left. I love it. All right, so Patricia says, yeah, she's talking about this right here. So yesterday's high. Okay, so you mean this point right here. Okay, good. You guys see it. All right. We're just making sure we're like 1 + 1 = 2 here. Okay? All right. So we're expecting a run up into that area, but a lot of times, what do? Price will likely react with the blueberry before getting to the large trap area. Always deal with this. This is a strong EMA. This is the 200 from the H1 chart. Definitely a strong EMA. And then they might run up. So they'll probably deal with the blueberry, then run up. That's the outlook. Okay, and you're looking at your projection. How are they going to handle this 0-0? You're going to watch to see how they handle that. Okay, so we'll dial it back to this point and look at the M15 and M1 chart in sync, just like we drew it out for you. And this should all look staggeringly familiar to you. All right, we kind of already walked through this. But I want you guys to be savvy on multiple time frames. All right, so there is our trap across the high. This is what our M1 chart looks like at the close of the gap time box. This is the close of the gap time box. 15 on the right, M1 on the left. Okay, this is your trap area that's absolutely invisible on the M1 chart. You wouldn't even know it's there. You need the 15-minute really spread out. Look at that, 1, 2, 3 days of price. Okay, you've got your push count, 1, 2, and now 3. So they did come up to the blueberry and pulled off the blueberry. Very typical. It's just a short note. It's not your short. Okay, they finally run up into this trap area to the left. And they do so just after 10 a.m. This is the close of the New York gap time box. Okay. Messing around here quite a few minutes. You're looking for a tap to the 13 EMA. Check. Gives us a tap to the 13 EMA. And then they do this, which is your time to go long. No, I hope not. All right, that's starting to look like an M. They close right on it, give a set of tracks, and what do you have here? Does this look like an entry to anybody? I certainly hope so. Going once, going twice. Yes, George says it looks like an entry. Okay, the thingy back to the left. It did an M1M. That's the thingy back to the left. Great. They like to do that after everyone gives up for the day. Well, that's probably your own projection of it, my dear, but the more flashcard sequences you make that thoroughly depict these trades that I'm laying out in front of you guys, being these guys, right, these two, the more you thoroughly flashcard these trades, the more you'll see you should have just waited. You were early. All right, so that's a revealing statement. I'm not here to do psychoanalysis, but they wait to get everybody that was too early in entering short. I'll agree with that. Still, you want to get the rhythm of this thing. You want to understand there's a sequence of events that has to happen. And a turn at the blueberry is not a short. You really, and this is where people get stuck because they don't look enough on the higher time frames back to the left. All right, that's what I'm here for, is to pound that nail into the board. Look back to the left for higher time frame trap areas. Don't even consider an A pattern short unless you get something to the left that's really, really clear like that. All right, so entry, stop loss above, looks good. All right. Dropping down, pull back. You're looking at a zone flip as it's pulling back. Remember, your M1 chart gives you these little waypoints. It's pretty nice. It's kind of like, I guess, a altimeter in an airplane. All right, you're going to pull back to the high and flip that zone. Sure they do. Pull it right back down. All right, this is today. This isn't form fitting. This happens every day. All right, really nice way to step into your stop loss down as well. If you're trading really heavy, you want to protect your position. As price moves, move your stop loss. Okay. I'd wait till you get to the catch up first, though, but that's just my own particular way, and it's not that far away in this case. All right, a little bit of a pullback. Look at how they're dealing with the 13. They're just hitting it, dropping off, hitting it, dropping off. Okay, hitting it, dropping it. You can see the zone flip in here. I didn't depict that. A little bit of one in there, and they rolled right over. So I did not depict this zone flip in here. But I want you to train your eyes so you see them at all times. I want you to see zone flips on your neighbors, on your pets, your dogs, your anything, your TV. I want to see zone flips everywhere. I want you to internalize this. It's going to help you a lot. All right, now we're at the key place. This is when we bring that stop loss below. Very important. Because this is going to matter in the next trade type that we go into next week. All right, these are the two basic ones. Next week we'll get into T-time trades. That's going to be as well an issue of tightening your stop loss as soon as you get to the 13 EMA. It's huge. Going to save your account. All right, now remember this entry was, and it always will be in this style of trading, it's a high of day entry, single spike, trap area. New York trades are a high of day, low of day entry style trade. And some of our new guys might not have seen this picture. The cat is very comfortable 40 stories above the city. All right, look at him. He has no fear in him at all. He knows he's going to be okay there. That's the same you taking these shorts at the top end of this area. Now that we've got the M1 chart, you can take your shorts after the confirmed close. No problem. All right, the kitty boy is used to it up there. All right, the key advantage to this approach is the ability to move stop loss to break even and not be taken out. You're going to run your stop loss to break even knowing that you're probably not going to be taken out. If you are taken out, there's a good reason you're taken out. Really nice to be up like this. All right. So now we're pulling back off the 13. Remember, it always bounces off the 13, almost always bounces. You're going to do that, bounce and then roll your next waypoint lower. You're starting to look. Deep price target is what, guys? What is the next waypoint we're looking for as a price target to the downside? Pop quiz to see if anybody retained what I just went over for the past half hour. Thank you, Jeff. Anybody type in, what's our next waypoint? What's the next thing we're looking at? Oh, not the water. Something in front of the water. What's in front of the water? I know you want to say, there you go, Dirk. Yes, Philip. It's the 0-0. It's in front of the water, right? Yeah, the water might be there by the time we get there, but always consider the 0-0s. They turn at these areas, right? So that's a possible area they might turn. And, in fact, it is where they turn, all right? So 0-0, remember, it's not just the 0-0. It's what's out in front of it. Okay, something in front of that 0-0 is also good. So what else are we looking at to gauge a possible reversal in this scenario? Say they turn at the 0-0. What else are we looking for? Let's see if you remember this one. Sorry to shake the tree all this much, but I really think it's important. Zone flip, not really. There's one other principle we talked about. What was the other principle we're looking at when we're looking for our take profits? Shall I put up the rule list? Well, you've been exposed to it not too long, so it's only been 20 minutes you've seen it. There's a hint. Trap 200, I'll agree with that, Al, but there's probably this to happen before that. T-time, yes. T-time comes in because it might turn before the 0-0. Never got to the 0-0, but T-time, you're seeing a reversal here. Okay, let's talk about T-time for a second. Keep calm, it's T-time. All right? It's a chart of the global FX daily average turnover, and it's an eye-opener. Wow. United Kingdom? Look at all the money that goes through London, man. That's London. This is USA in pink. Cool. It's like twice the size. All right? So the big boys, the big fish are London, period, exclamation point. Let's modify this baby a little bit. It's, people, average trader thinks of this, the FX market as a uniform thing. It's London session, Europe session, New York session, Sydney, Tokyo. Oh, they're all about the same. It's, trillions of dollars floating around from bank to bank, and they're all the same. No. London, big fish are here. You can barely see Tokyo. You can barely see Sydney. New York is a little bit bigger. Europe's just a little bit bigger. But, boy, I'll tell you what, the big fish are in London, period. So what does that mean? That means that T-time is a big deal here. Thus, T-time is a big deal here, the entire Earth, because of this. Okay? That's your volume. So much more going through London than New York. I mean, it's pathetic. Well, it's beautiful. In its own way, it's jolly right beautiful. And God bless it. It's working. It's the way we trade, all right? That's why London is a very important part of our trading. And this tea time is extremely important because a lot of times they'll do this at tea time. They'll do a fast move. Didn't quite get to the 0-0, but this is mid M1 candle too, guys. This is mid M1. This is mid M15. This is like a pick on the edge here. All right, look at the proximity of gap time. Look at the fast move. It's a unidirectional move right into London. You should train yourself to see reversals before they happen. All right, the way you do that is to pull price on the hard red edge like we're doing here. All right, fast move into tea time at a 0-0 figure. You should be hearing all sorts of stuff, you know. If it's Bean from UK, Mr. Bean, I don't care what it is. You should be ringing bells in your head, right? Reversal, very likely. Extremely likely. So that 0-0 played its way, but it was really this timing that's the big factor in this move here. Take profit, take your trade off, yank it. Just take it off, all right? It would give you, we're going to include the spread here, it would give you a nice pull of 1 risk to reward, 2 risk to reward, 3 risk to reward, 3.5 risk to reward, right? That's a 3.5 RR. Instead of waiting for this pullback to just get a 3 to 1 RR, now you have a 3.5 to 1 RR. Do the math a little bit. With a stop loss to break even in only 26 minutes after entry. And it's at 26 minutes from the time you got in this candle right here to the time it hit the catch-up, rolled stop loss to break even. What does that mean? That means so for only 26 minutes, you were exposed to a minus 1% risk at stop loss to your account balance. That's really nice. About half the time in this trade, you had no risk. No risk. Okay, then 36 minutes after entry, your account was up 3.5% if you had a 1% order. Now, God forbid, you had a 2% order on there. What would that make it be? 7% up on your account in one trade in New York? You don't think New York trading is quite possible? It's absolutely possible. All right, I'll tell the story. I'll tell it again. I was doing this 6 months, just New York trading. Sent Steve my statements. He said, "You're doing well. Can you help guys out?" And I helped out the FP guys and all that, and it blossomed into something really wonderful. You can trade New York. All right, so that's the ideal here, is to let you know New York is possible with really good numbers. Okay, let's just continue with this idea. Say it's gonna take you a while to get confident to stack up a 2% risk at stop loss in here. I understand 1% is probably the way to, maybe 0.5% is the way to go when you're first doing this. But at some point, you're going to get the confidence. You'll jump in with 2% with a tight stop. Then you'll get 7% on a trade like this. Didn't take a lot of work at all. There was no drawdown, no pain. Happened today. All right, 2 of these a week, and you double your account every 4.2 weeks. So if you pull 14% out of the market every week, that is double every 4.2 weeks. A little, probably, give or take. It's around there. 4.5 weeks, 5 weeks, somewhere around between 4 and 5 weeks. You're doubling your account if you can take 2 of these 7% trades a week. So wait for 2 really solid New York trades a week? Absolutely. We've been trying to say that over and over, but everybody needs to get the experience by trading a lot. I suggest you do that in demo, not in your live account. And even better than that, do it in the WSM Viewer so you don't have the headache of having to sit through this stuff. WSM Viewer is instant, right? You got the entire week of charts sitting right there. All right, but you have to learn to be quick and prepared on the take profit at the extreme, just as you were at high of day, low of day. In fact, your entry in at high of day here was actually easier in that you were waiting for a close below the 13 EMA, right? You were waiting for some type of some type of close below the 13 get in. This one was right on the edge. This one you took it basically as it hit this low a minute before the tea time changeover, right? So you have to get Kitty Boy on the top. You got to get Kitty Boy on the bottom too. You have to be able to take your profits the same way that you would do a high-low entry. All right, fast move into tea time at 0-0 figure. That's what you wanted to have in your head as this thing hit. And also knowing you're up 3.5%. If you had a 1% or up 7%, you're up 7% on a single trade. There's nothing wrong with taking that trade. All right, Kitty agrees. All right, so there does its little reversal right in front of 11 a.m. Hooks back up. This obviously is your last out. If you did a flashcard sequence, it closed above the 13 EMA line. Okay, close above that, you're out. Last out. All right, and sure enough, it just went up, and it's still sitting there right now. Okay, so great session tonight, guys. We're going to work into next week. We're going to do the tea time trades. All right, so you can see we exited an AV pattern with a higher time frame trap into a tea time reversal. Next week, we're going to get into New York trading tea time reversals. West Coast means you can take what was it, 11, 10, 9, 8. You can take an 8 a.m. trade instead of this 4 in the morning garbage. Now, you can conceivably make a living doing just 11 a.m. reversals. I'm going to say that. I'll say it again. You can make a living taking just 11 a.m. Eastern Standard Time reversals, 8 a.m. West Coast PST time. All right? I know that's good news for everybody. There's a lot of work to do. Heck of a lot of work, but we're holding up our end. You've got to do your end, and whatever it takes to get there. All right, so that's the schedule for next week. God bless you guys. 9 a.m. Arizona time, Steven says. That's funny. Yeah, it is 9 a.m. Arizona. No doubt about that. All right, went over a little bit. Hi, Herman. Happy holidays to you, my friends. Hope to see you soon. I'm going to go visit my buddy Herman. He's only like 5 miles from here, so no excuses. All right, guys, have a great rest of the night, and we'll see you tomorrow for the pre-market, 7:45 a.m. Eastern Standard Time. Take care, everybody.